For over a decade, the Pino Training Organization has been preparing adults to become more successful and effective in their lives, and now is proud to bring you the business of cash flow with life and wealth strategist Larry Pino. Larry's the best-selling author of books such as Finding Your Niche, Cash In on Cash Flow, The Desktop Lawyer, and numerous others. Larry has successfully owned, operated, and sold over 45 businesses in his career and has bought and closed over $100 million worth of real estate and debt instruments for himself and his clients during his career. He's a commercial lawyer and business consultant, has lectured to over 1 million people, and for the past 10 years has traveled the nation dedicating his life to making people personally and financially more successful. Along the way, Larry has pioneered the cash flow industry as a lucrative and dynamic new field of financial services. So grab a pen and paper and get ready to learn how to maximize your profits as Larry's powerful logic, simplicity, and outstanding delivery take you to a completely different level in strategizing your business and marketing plan. Ladies and gentlemen, join Larry Pino live in the business of cash flow.
All set? Let's get started. What I want to talk about is the business of cash flow. Don't even worry about your books, by the way, because none of this is in there. So don't worry about that. Of course, a lot of the information is, but not the construct that I want to actually use. So let's go ahead and talk through that. First of all, let me set the foundation for why it is that I think it's important that you recognize all of the way that we structure this thing, because I think it's important for you to see. In your flow chart, if you remember, and once again, you don't even have to open up to the flow chart. What I want you to remember in the flow chart is that there are 11 steps involved in the transaction, right? That's the actual transaction for cash flow, 11 steps involved in the steps or the flow for this particular thing. Understand that in the process of looking at that, the first obligation or the first responsibility you have anytime you're getting involved in any type of business is understand the flow. How does that flow operate? Once again, it doesn't matter if it's a cash flow business or any business. How does it actually flow out? If you take a look at the cash flow industry, this is how it actually flows out. Starting with the marketing all the way through to the working the business on the very end and all 11 steps in between. Now, what I want you to recognize is once you understand the flow of the business, what you would then want to do is say, okay, out of this, what are the core processes? Those things without which this business would not operate. What are the core processes for this business? You know, I can get away with a lot of things in a business. You know, I can get away not knowing what's deductible. You know, make the money first, then we'll figure out whether it's deductible or not. So I don't need to know whether something is deductible to operate a business successfully. I don't need to know about occupational licenses in order to operate a business successfully. Will I eventually need to get an occupational license? Maybe, maybe not. Depends on where you are and what township and all that. But the bottom line is it doesn't matter in terms of the success of the business. Should I incorporate, Larry? Who cares? Because whether you incorporate or not doesn't have a lot to say about operating the business successfully. So all of those things that we talk about that are things that you need to know, that's one thing. But what it doesn't say anything about is what the core processes are for the business. So when you first understand the flow of the way a business operates, your next responsibility is to then say, okay, what are the core processes in this particular business? So, what are the core processes in this business? The first one that you see up there becomes fairly self-evident, and that is that first thing right off the bat that you need to do is bring a prospect to the table. So obviously the process whereby you bring a prospect to the table is the marketing. So number one core process. Number one process without which your business would not be able to operate is marketing. And that's exactly what it's called. By the way, the good news for you, we actually have real transparencies here for you, so you don't have to see my handwriting this week, this day, right? Number two, the second aspect is once I've got a prospect, now what do I do with the prospect? Obviously, I don't make money off of prospects. I produce income when a prospect becomes a client or a customer. So the process whereby a prospect becomes a client or a customer is the second core process. And we call that the conversion process, converting a prospect. And if you take a look at it in terms of the flow chart, what does it look like? Well, we have the presentation and information gathering stage. We have number two, the evaluation stage. We have number three, the contract stage and the negotiation stage with the seller. All of those specifically relate to the second process, which is called the conversion process. One more. You've got your prospect. You and your prospect are sitting at the table. You're looking around, and you're wondering who's going to show up with the money. Show me the money, right? So in this business, obviously the third core process is funding. Somebody who's prepared to show up with a check. How does that reflect itself in the flow chart? Well, obviously your selection of the funding source. Your, number 2, packaging the information for the funding source. Number 3, the due diligence, the closing documentation, the closing itself, and so forth and so on. All of those relate to, number 3, the actual funding itself. Now, if you take a look at those 3 areas, marketing, number 1, core process. Conversion, number 2, core process. Funding, number 3, core process. What you want to recognize is you cannot know a lot of things in an industry. What you absolutely need to know are the 3 core processes that make that business work. That's what I want to focus on today. See, what I want to focus on is making sure that you, number 1, identify what you need to be spending your energy and time on, and number 2, develop skills specifically associated with those 3 areas. So as a result of that, what we're going to be doing is talking about these 3 core processes. By the way, I'll also mention one additional point. If you take a look at the curriculum is based on core processes. That manual is 5 times bigger than what you covered in class. But that manual is bigger because it's got a lot of other stuff that at some point you may want to reference. However, what do we teach and what do we talk about in class? How to develop referral sources, right? That's a marketing issue. How to identify presentations appropriately. You know the calculator? The calculator has no intrinsic value. No intrinsic value, no inherent value, except the better you are on that calculator, the more needs you can satisfy. And the more needs you can satisfy, the greater will be your percentage of conversions. See, the calculator isn't a technical device, it's a conversion device. The more you are, the better you are, the more deals you'll close. Why do I care about you understanding evaluation criteria? Because you want to make sure that for every deal you've got, you have some funding source wanting to do business with you. So you need to understand what their evaluation criteria are. Why do I care about you filling out a mortgage worksheet? Or how to understand what a checklist is or a client profile? Why? Because the more you understand what the thinking is of the funding source, the cleaner is your information to the funding source, the more the funding source is going to be doing business with you. See, it simply relates to good news and bad news. It simply relates to, good news, these 3 core processes. The bad news is it relates to these 3 core processes, right? So what you need to know is know what they are. So what I want to focus on is getting through each one of these and making sure that you understand how to use each one. Okay? Everybody with me? All right, let's start off with number 1. Let's talk about the very first of these. We're talking about, of course, since I developed the transparency, I might as well show you. We're talking about the 3 core processes, and the 3 core processes are, number 1, marketing, number 2, conversion, and number 3, funding. And let's take a look at this point at each one of those, and we're going to start with the very first one, which is the marketing process. First thing I want to talk about is we talk about, and feel free to take your notes wherever you like. The first of these that I want to talk about is the marketing mindset. And let me just simply suggest to you that what the marketing mindset basically says is what basically is an attitude. Each one of these processes all have a fundamental attitude supporting them. So if you take a look at marketing, the attitude that supports marketing is a marketing mindset. What does a marketing mindset say? Marketing mindset says business isn't business, business is marketing. Business isn't business, business is marketing. That's the marketing mindset. And when I say that to you, what I want you to recognize, the need to understand it, is that when most people get involved in a business, what they do is they get involved with all the different trappings of the business. You know, you want to go to an office supply store, you want to buy a stapler? Go buy a stapler. You want to buy a tape gun? You know, they come in matching colors? Go buy the matching colors. You might want to even get some files. Why don't you get some files? And when you get purple, you get purple files, right? You can get all of that stuff. You want to get the labels for the files? You know, you might even want to get a mirror so that you can look at yourself going out of business, right? You know, the thing is, what most people think business is are all the trappings of the business. The reality of it, it's real simple. Business is not about business. Business is about marketing. Get the marketing straight, and you have a chance to make money. If you don't get the marketing straight, you have no chance to make money whatsoever. And I say that to you because the fundamental attitude that most people bring into self-employment is why there is so much failure in self-employment. See, most people bring what I call an employment model in. What an employment model says is, do what I do and pick up a paycheck. Do what you do, pick up a paycheck. Doesn't matter the level that you do it at. See, if I'm doing whatever I'm doing, I'm cleaning streets, I'm putting garbage in a garbage truck, or I'm a nuclear physicist picking up a paycheck. The reality is just the same. You do what you do, you pick up a paycheck. That's an employment model. That's not a self-employment model. A self-employment model doesn't say, do what you do, pick up a paycheck. What it says is, find the person to do it for, then do it. Then you pick up a paycheck. See, what the self-employment model says is, it doesn't matter what you do unless you've got someone to do it for. So let's find the person to do it for. That's the marketing mindset. Business isn't business. Business is marketing. Get the marketing straight, you have a chance to make money. See, give me a company with a lousy product and a strong marketing formula, I'll take it any day of the week. Because with a marketing formula, I can always fix the product. Give me a company, as I had, with an outstanding product, but no marketing formula. I'll give you a recipe for bankruptcy. I was fortunate enough to learn my lesson first, by the way. But when I said to you earlier, and I meant it, when I built it, I thought they would come. I built the product. What I had no idea about was the fact that that's not what it was about. What it's about is building the product, but more importantly, finding the person for whom that product becomes appropriate. That's the process of self-employment. That's why, by the way, and that's good news for you, and I want you to recognize the good news, because what I want you to see is that if that's the case and it's all about marketing formulas, then the only real issue at this point from your standpoint is, let's develop a marketing formula, and let's make the marketing formula successful. See, what do I not say? I don't say it takes money to make money. Matter of fact, that's a myth. If you take a look at most people out there and most business writers, they talk about 3 out of 5 businesses fail for a lack of capital. I got to tell you, that's absolute garbage, because that suggests that what you can do is capitalize yourself around a marketing failure, or capitalize yourself around a lack of a marketing formula. If I've got $1 million in the bank and I have no marketing formula, I'll have $1 million, then I'll have $750, then I'll have $500, then I'll have $100, and then I'll be out of business. See, it's not the amount of capital, it's the lack of a marketing formula. If I've got $1,000 in the bank and I have a marketing formula, I'll have 1, then I'll have 3,000, then I'll have 9,000, then I'll have 27,000, then I'll have 100,000, then I'll have 300,000. See, the reality of self-employment is the marketing formula is generative. The marketing formula is productive. It's not the capital which is productive. Capital without the marketing formula becomes somebody else's capital. It goes away. The marketing formula is what counts. So when you hear those people who are writers who say marketing is 20% of the game or marketing is 40% of business, let me tell you something. Marketing is 100% of business. You know that flow chart, 1 through 11? If you don't have a marketing formula, don't worry about 2 through 11. If you don't have a marketing formula, don't worry about where the gold button is on your calculator. You'll never have to turn it on. If you don't have a marketing formula, don't worry about how to use the checklist. You'll never have to fill one out. See, the marketing formula is one of those underlying thresholds that are so substantial that with it you have a chance, without it you have no chance at all. Now, I'm saying this in a half a dozen different ways, and I'm saying it over and over again, not to be repetitive, but to have it sink in. Because I know what a successful graduate makes. And I also know what makes a non-successful graduate. And more than anything else, where it is right here in the marketing mindset. Understanding that it's not about doing, it's about the marketing. And understand the marketing, you got yourself a chance to make a substantial profit. But if you don't, you have no chance at all. So, marketing mindset. Business isn't business, business is marketing. Get the marketing straight, you have a chance to make money. Don't get the marketing straight, and you have no chance to make money whatsoever. Now, I've painted you into a corner, and I've done that deliberately, and I'm going to tell you right now that in that corner over there, there's only one way for you to get out. That's to market your way out. And in saying that to you, what I want you to know is it's okay. Because when you're marketing your way out, it's not that tough, as long as you understand what marketing is. See, most people are afraid of marketing. I was afraid of marketing. I was a philosophy major, for heaven's sake. I mean, I studied Schopenhauer. I studied Nietzsche. I studied Kant. I mean, I studied these people that are not in marketing books, you know? And I used to walk around the campus, and the liberal arts school at Notre Dame was right next to the business school. And you have all these business school people who are studying like these great big books of 1,000 pages on marketing. And I used to think, good grief, because I always wanted to be in business. And I'm thinking, how could I ever compete against these guys who know all that stuff? That stuff isn't marketing. That stuff is advertising. Marketing is not advertising. Marketing is marketing. Advertising is advertising. Advertising is doing. You know what marketing is? Marketing is the stuff that you do before you do anything at all. Marketing is the stuff that you do before you do anything at all. What's the definition of marketing? The way marketing is defined is marketing is the process whereby you find and communicate to a qualified prospect. That's all it is. It's the process whereby you find and communicate to a qualified prospect in the most efficient way possible. In the most efficient way possible. That's what the definition of marketing is. And when we take a look at the definition of marketing and we recognize that that's all we're talking about, what did I not say? What I didn't say is that marketing is running classified ads. What I didn't say is marketing is putting billboards up. What I didn't say is marketing is going around to all the real estate brokers in town and telling them what you do. I didn't say marketing is giving brochures to everybody in a shopping center. That's not marketing. Marketing is the process whereby you find and communicate to a qualified prospect in the most efficient way possible. And why do I say that, the most efficient way possible? Because that's the standard. The standard for marketing is not volume. The standard for marketing is efficiency. If you try to measure your standard for marketing in terms of volume, what you'll do is you'll end up buying yourself into the poorhouse. See, unless I have a very efficient marketing formula, it doesn't matter how much I spend. I can spend 10 million bucks or I can spend $5. It doesn't make any difference. If I'm not efficient in my marketing, I'm not going to end up with any successful product, any successful result. See, what I need to know in marketing is that when I spend $1, I get 3 back. If I spend 10, I get 30 back. If I spend 100, I get 300 back. That's what I need to know. I can't make that up with volume. I was reading a prospectus on the plane out here last night, and in this prospectus, it was a company, it was a seminar company, as a matter of fact, that, real interesting, he's going public, right, hasn't made a dime since the time he was in business, he's going public. And so I'm looking at this, this prospectus that he's got. First year out, he did something, well, forget about the first year. The second year out, he does $400,000 in sales. And he loses, and on $400,000 in sales, by the way, he spent about $30,000 in marketing. $30,000 in marketing produced $400,000 in sales. And what he ended up doing is losing about $500. Okay, not bad, second year out. The third year out, it's like $500,000 in sales. He spends $75,000 in marketing. He loses $1,500. The third year, which is last year, 1997, he's at $575,000 in sales. He's at $175,000 in marketing. And he's lost himself something like $30,000. See, the volume is irrelevant. You're spending $30,000, $70,000, $175,000. It's not a volume issue. It's an efficiency issue. And it's no different if you look at it from your time. See, time is money, and not in the cliche sense. It literally is money from your standpoint. Whatever your earning power is, what's your earning power? $10 an hour, $20 an hour, $30 an hour. Whatever you know, you can get a job tomorrow for. Or whatever, if you've got a job right now, whatever you're earning on an hourly basis. So if you're earning, just to make the number easy, if you're earning $10 an hour and you spend 10 hours, you've just spent $100 because that 10 hours could have produced $100 of income for you. You can't make up in volume of time or money what you lack in efficiency. So your focus in marketing always has to be efficiency. That's why what comes first in marketing is understanding how to create what I call a positive marketing formula that produces revenue in direct relationship to the dollars that you spend. If I spend 100, I get 3. If I spend 1,000, I get 3,000. That's the approach that you want to take. Now, once again, the good news is, because marketing is what you do before you do anything at all, the good news is it's very doable. Matter of fact, so doable, that's all you need to do is just simply understand and develop a particular marketing formula. And the particular marketing formula that you're going to develop comes from the answer to 5 basic questions. So basic that without the answers to those 5 basic questions, you shouldn't be doing anything anyway. It's that basic. So let's take a look at what those 5 questions actually are. The first of those questions that you're going to be asking yourself when you get involved in marketing is, who is my prospect? Question is, who's my prospect? First out. It's sort of like, you know what? What am I trying to accomplish? To find and to communicate. How in the world can I find you if I don't know who you are? So my first objective is to find out who you are. Who is my prospect? Who is the person that I'm actually going after? First question that I need to be asking myself. And if I don't know that, then clearly I'm not going to be terribly successful, and I'm certainly not going to be very efficient at finding you. Well, who is it? Who's my prospect that we're looking for? Well, clearly we need to recognize that our prospects are going to be either the payee, that is the holder of the income stream, or it's going to be the referral source. The holder for the income stream or the referral source who will bring me directly to that income stream. And you look at that and you say, Larry, of course. And I say, of course. Of course. Think about it. That's what you were planning on doing? Focusing your attention strictly on the payee and the referral source to the payee? See, when I say that to you, what I suggest is, you know, are there, for example, join the Chamber of Commerce? Yeah, join the Chamber of Commerce, but so what? So what? So you join the Chamber of Commerce. Does it consist of a direct payee or a referral source for the payee? You know, I ran for office in 1982. I don't know why I ran for office, but I ran for office in 1982. I ran for Winter Park City Commission. And I got to tell you, I ran this race as if I was running for Congress. I mean, I should have been running for Congress. I don't know. Because I certainly ran that thing as if I were going to some type of national office or something. We're talking about a town, Winter Park, probably has a population of about 14,000 people. Out of those 14,000 people, there are 2,000 voters. You know what I was doing? First of all, I advertised, all of my advertisements, Pino for Winter Park City Commission, were in the Orlando Sentinel. The Orlando Sentinel goes to all of Central Florida, goes to about 700,000 people in order to reach 14,000 people, right? Of which 2,000 are voters. You know, I did coffees all over Central Florida. No matter who I knew, I would have them do a coffee for me. The interesting thing about it is nobody resided in Winter Park. So I have all these people who are doing coffees for me across the entire Central Florida area, right? I had Father Berzonets. Father Berzonets, one of my great supporters. You know, he's Greek Orthodox, and he kind of liked the Notre Dame connection and all of that, right? So Father Berzonets sets me up to do a full-day Meet the Candidate presentation at Slovak Gardens. Slovak Gardens. There was not a citizen among them. The entire thing, they were all Eastern Europeans who bought condos and apartment buildings in Slovak Gardens, right? They were Hungarian and Czechoslovakian and so forth. English was not a common language among us. And I'm doing an entire thing, right? And I'm looking at this thing and I'm wondering, at some point it starts to dawn on me, right? I probably would have been better off getting the list of the 2,000 voters who are voting in the Winter Park City Commission, right? See, you can do a lot of this stuff, but it's doing. It's doing. Let's figure out what we want to do before we do any of that stuff. What are we talking about? Efficiency. Efficiency in your efforts. Efficiency in your marketing efforts. Let's identify that we want a direct communication to a payee and or a direct communication to a very specific referral source that will get me to that payee. That's where we need to be directing our attention. Now, of course, am I going to turn away a communication when I get introduced to Gary? By the way, is it Clay? Yeah, Clary. And I get introduced to Clary, I want to say, hey, I'm Larry Pino. You know, how you doing? So I'm going to introduce myself to him. I'm going to let him know what I do, but I'm not going to count on that for a paycheck tomorrow. That's some referral that I might have sometime down the line, but that's not what I'm going to make next month in income. You know, that's not what I plan on putting in the bank. See, the referral source has got to be a direct referral source to an income holder. And I also need to have a direct income holder that I'm going after. So first of all, that's what we're looking at. Now, how do we do that? How do we make sure that we're focusing our attention? Well, the first thing is you can either approach it from the standpoint of a debt instrument. You can approach it from the standpoint of a debt instrument. In other words, what I can do is I can select out the particular debt instrument that I want to be going after. And in the selection of the debt instrument that I'm going after, I'll choose what? Invoices. I'm going to go after lottery owners. I'm going to go after structured settlement owners. I'm going to go after boat note holders. I'm going to go after airplane note holders. In other words, I can go after a particular type of debt instrument, and that debt instrument backs me into the holder, or by definition, the referral source for that. So that's one way to do it. Another way that you could potentially do it is by type. We've got a graduate, for example, in Central Florida who is Iranian, and as an Iranian, he specializes, his type niche is for the Iranian business owners in Central Florida. So if they've got a business note or they have a real estate note, in other words, multiple debt instruments, but the type classification is the Iranian business owner in Central Florida, and there are quite a few of those because he's tied into that community. That's what he does. So that might be another way. But either way, what I need to be able to do is I need to refine parameters enough so that I end up, that's not defined, by the way, it's refine. I need to be able to refine parameters enough so that by the time it's all said and done, I'm very clear on the particular type of income holder, income stream holder, or referral source that I'm going after. Now, if I'm looking for a who is my prospect, I know that I need to narrow it down either by debt instrument or type to a particular classification. But I also need to know that I have to refine the parameters enough so that I end up at a particular thing. How do I want to end up when it's all said and done? I need to have a standard which maintains a targeted universe. And I'll tell you what that means in a second. A targeted universe of prospects that have two things. Number one, they're manageable, and number two, there's a commonality of interest. They're manageable, and they have a commonality of interest. Now, what do I mean by manageable with a commonality of interest? See, I can go out, and you can say, Larry, I've got a particular, I know that there are real estate note holders all over the country. And I say, so what? Yeah, there are. Matter of fact, there are 1,980,000 of them across the entire country. So what? You going to go after them? No, it's not a manageable list. But Larry, that's not what I was talking about. What I was talking about is in the state of California. Okay? So that narrows it down to 800,000 real estate note holders. You going to go after all of those? No, 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 no. That's not what I mean. I'm just simply talking about in the general Southern California area. Okay? That narrows it down to 47,000 note holders. You going to go after them? No. In other words, what's the first standard we have to impose on ourselves? Manageability. I've got to have a universe of prospects which is manageable for me to be able to go after, because you have neither the time nor the resources to efficiently and effectively go after a non-manageable universe. How are you going to do that? So what you need to do first of all is manageable, and it needs to be down to a number. Now, just to throw out a number for you, to give you a benchmark, my suggestion, because you're going to listen to my number because you're thinking of a much larger number, I'm going to suggest to you that when it comes down to a manageable universe, I'm going to say that your universe should not be in excess of 500 people. And you're saying, 500 people, can I make a living on 500 people? You can make a better living on 500 prospects than you can on 47,000. Because with those 500 prospects, you will focus your communication in a way, which I'll show you, that will produce far more effectiveness. So we've got a graduate, for example, in, matter of fact, California, state of California, graduated from IFI several years ago. He was going to specialize in architects. Now, just understand, as you probably know, in the state of California, if you are waiting tables, you are either an actor or an architect. What are those two, right? So the list of and the numbers of architects in the state of California, I mean, it's kind of like, zillions. So he goes to, and he's obviously not going to market his factoring services to all of his architects, right, who are waiting tables and designing garages, right? So what's he going to do? He says, okay, now that's the entire universe of architects. Now, out of those in the state of California, what would I do? Well, if they're not producing $1 million in fees, architectural fees, at least, there's no point in calling on them. On top of that, if they don't have at least 10 employees, they probably don't have major payroll problems or major payroll challenges. And on top of that, we need to make sure that if they're going to factor, we might as well be dealing with people that have factorable, rateable clients. How about government work? Architects that are doing government work. So out of a zillion, he ends up with 160. And out of that 160, he then begins the process of communication. Out of a period of 3 years of work in the business, 160 of those architects became his primary database. He had developed, by the time I talked to the last time after 3 years, he had developed 38 as his clients. Now, I'm not sure how many clients you think you need to make a good living in business, but I will assure you that 38 clients will do it. You'll probably make somewhere between $100,000 to $250,000 a year on 38 clients. Now, was that efficient? You bet it was. See, his prospect base is 160. How did he get there? He refined the parameters. And you refine the parameters into something that gives you a manageable universe of people. Now, what do I mean by commonality of interest? What I mean by commonality of interest is at some point you need to be talking to these people. Because remember, it's to find and to communicate. You need to be talking to these people. If I talk to them, I want to be talking in terms which are common to them all. See, when you showed up at a free workshop as an attendee prospect, you show up at a free workshop, you're all there for one particular reason. You don't have some people who are there because they want to learn how to become better parents. You don't have other people who are there because they want to learn how to operate a successful relationship with their spouse. Other people who are there because they want to develop a good, solid physical fitness program for themselves. In other words, you're all there for one reason. You're there to figure out how to produce additional income, part-time or full-time, for yourself and to better your future. That's what you're there for. Therefore, our communication can be consistent with that because there's commonality of interest. When I talk to a Chamber of Commerce, and I mention the Chamber of Commerce because so many people just automatically go out there and join the Chamber of Commerce. I don't have a problem with it, but I just want you to understand the difference. You join a Chamber of Commerce, you're talking to all small business people, or you're talking to all members of the Chamber of Commerce. The only commonality of interest they have is that they're in business. That's it. There's no other commonality of interest. So I suppose I can do a talk to a group of people who are all members where you're the landscaper, and by landscaper what you're doing is you're pulling around if you're making $40,000 a year mowing lawns, and you could be the Sir Speedy printer over there, and you're doing $150,000 a year, and this one over here is a major medical clinic that's billing $9 million a year, and this one over here is a 4-color printer that's doing $11 million a year. I suppose I can talk in terms that try to embrace you all, but the more diverse the group, the more difficult is a relevant communication to them. If instead what I do is I do nothing but communicate to 4-color printers in the San Diego County area, that communication, even if there are only 50 of them, but that communication will be a more specific and a much more relevant and a far more powerful communication. So what I want my prospect base to have is commonality. I want it to be manageable so that from that point on, once I've identified them, I can just simply be bombarding them with communications which create the need for and the benefits of the type of service which I'm actually offering. So what ultimately do you achieve out of this? What you get out of this first question is you get your prospect category. You get a prospect category. What you ultimately do is you end up knowing by the time you've finished off your analysis of the first question, who is my prospect? What you now have is a prospect category that comes out of there. See, now you've got a target to go after. See, if you take a look at this 360 degrees, you've got the walls all over here. You take a look at all through the wall, and every one of those is a potential target. And what you do is you graduate, and on Monday, you go out there, and you start flailing. And I say to you, why flail? Figure out what your target is. But Larry, how do I know what my target is? Define it. Just define it. You know, it's kind of like there's your dance partner, dance. But how in the world do you dance if you don't have a dance partner? You've got to select out your dance partner ahead of time before you actually go out there and do anything at all. This allows you an opportunity and a very specific opportunity to do that. The only two ways you'll fail, by the way. The only two ways primarily that you can fail. Either do nothing at all, right? That's pretty obvious. Or number two, be so disjointed as to be marketing schizophrenic all over the place. And the only way to prevent yourself from doing that is to be very targeted from the very beginning by selecting and defining your prospect category. I will tell you, by the way, when I have a student who calls me or who writes me a letter who's having difficulty and says, help, first question I always ask, who's your prospect category? Who's your prospect? If you can't tell me in one certain sentence of 20 letters or less who your prospect category is, then that's your problem. And that will be your problem. You know, when Judy Miller, and I think you remember the name Judy Miller, When she came and she was working in Southern California, what happened at the time when she first got involved in this thing is she'd done some additional things, and finally she decided to go after note holders who were in third and fourth level cities across the United States who had a newspaper of general circulation that ran classified ads that she could buy on a remnant space basis. If you ask Judy Miller about, I'm talking about San Diego, I'm talking about Tupelo, Texarkana, right? Those tiny towns of 15,000 people or less that had one newspaper, classified ads that she could buy on a remnant space basis. That's where her advertising began. Remnant space contract she started off with was $500 a month. Then she went to $1,000, $3,000, and she finally ended up at $10,000 a month. When she was doing $10,000 a month of classified in that particular area, she was doing, from Los Angeles all across the country, 40 to 45 notes a month. 40 to 45 notes a month. That's when she got the Top Gun Award for Metropolitan. Now, why is that? Because when you ask her, who's your prospect, she'll be very specific. My prospect is a note holder who lives in a city with a population of under 15,000, that has a newspaper of general circulation, that has a classified advertisement section that I can buy on a remnant space basis. Now, real hard to fail when you're that specific. And it's exactly the same way with every of the categories that you choose. What kind of airplane notes do you buy, Larry? I go after lien holders secured by aircraft that are single engine or twin engine that are under $500,000 in value. Real specific. See, once you define the category, now you have an opportunity to begin the development of your marketing formula. Number one, who is my prospect? Gives you the prospect category. Standard is going to be what? The targeted universe that is meaningful, targeted universe that is common, and the common universe that's manageable. Okay? Number two, once I understand what my prospect category is, next question. I can't market to a prospect category. I need a person. So now, where is my prospect? Where's my prospect? Specifically and very physically, where is my prospect? And where are you going to find them? Find them all over the place. You'll find them in lists. You'll find them in local chapters. You find them at home. You can find them in different types of business locations. All of the various ways that you're going to have an opportunity to be able to find these guys, but that's what you're talking about is I'm going after to find out where these people are. Now, understand the basic issue here. I need to be talking to you. I need to be talking to Nat. And in the process of talking to Nat, I need to find out where he is. I need his name, I need his address, and I need his telephone number. Now, if we take a look at that, and we take a look at all the different ways that we can get it, the issue that you're going to need to confront, because what are we doing? We're superimposing efficiency here, is asking ourselves the question, how is it most efficient for me to be able to go after these people? Where's the efficiency coming from? Well, obviously, what my standard has got to be is accessibility. I've got to have accessibility. Every one of these things has standards. I have to have accessibility. What good is a prospect if I can't get at you? Or, what good is a prospect if I can't get at you efficiently? So my standard has to be efficiency here. It clearly has to be accessibility. See, part of the problem, by the way, with marketing to real estate note holders is that they're inaccessible. They're buried in their homes. There's no way to get at them. Yeah, you can get at them, but the way that you get at them is the most efficient method of marketing, direct mail. So the only way that I get at this person at home is, the real estate note holders, they don't hang out at a particular place, right? There's no real estate note holders bar and grill in San Diego, right? There's no place that these guys can go. So I've got to get at them in their homes. They're buried in their homes. So if I send them a letter, I can, but that's relatively inefficient. On the other hand, I can get after real estate brokers. I can get to them. Where are they? They're in their businesses. See, it's real tough to get after a business note owner because there's no place that a business note owner goes. There's no association that they're members of. They just happen to have sold a business and they've taken back a note. Just because they took back a note doesn't mean they're at another business at this point. They just happen to be receiving payments on a note. So I can't get at them terribly efficiently, can I? However, I can get to the business brokers efficiently. See, my issue is always going to be one of accessibility. I need to have an accessible universe of people to go after. So once I've established what my prospect category is, what I now need to say is, which one is the most accessible to me? based on that particular prospect category. Now, here's the issue. We have two types, right? Income stream holder and referral source. What I want you to see is that the decision as to which one to focus on primarily is strictly an accessibility issue. See, if I have defined my prospect category to be 4 color printers in the San Diego County area that are doing large advertising, for example, or large publishing projects, then what I've done is I've established for myself a particular contact sheet that has the names, addresses, and telephone numbers in that level. Now, can I still go to the banker and request, hey, Nat, my name is Larry Pino, I'm a factoring broker, and I'd like to talk to you about referring business to me. Can I do that? Yeah. But the fact is, this person is accessible, but this person is long-term business. If I can get directly at the 4-color printer that's doing in excess of $1 million in sales, I'd much rather go after the direct income holder than a referral source for future business. So when we teach you referral sources, certainly I want you to use them. But where you use the most effectively a referral source is where you don't have direct access to the income stream holder. That's when you use the referral source. Now, not to say that you're not going to make sure that everybody knows your business. So certainly every banker in town, if you're going to do factoring, should know that you do factoring, brokerage. Certainly all the other areas that could provide referral sources, for example, would certainly be one that, advertising agencies, for example, if you're going to be doing 4-color printer work, advertising agencies if you're going to establish the printing industry as your sector. So you want those people to know your business, but the best source is always the income stream holder if you can get direct access to them. The standard is always accessibility when it comes to your prospect list. Now, based on that, what do you want to end up with? You have your prospect category. That's number 1. Who's my prospect? Number 2 then becomes, where is my prospect, and what's your ultimate result? Your ultimate result is your prospect list. That is literally the name, address, and telephone number of the people that you're going to be calling on. Now, see how easy this starts to become? Because as long as I know ahead of time where I want to end up, all the rest of the marketing becomes easy. It's disciplined, it's formalistic, but that's precisely the advantage of it, is that it's very disciplined and it is very formalistic. So, I know what my prospect category is by definition. I've defined it to be such. I now know who occupies that prospect list. I want them to be what? I want them to be manageable. They have to have a commonality of interest. And there also has to be what? There has to be an accessibility component that will allow me to be able to reach them in a meaningful way. Now I have found you. Now that I've found you, what do I now need to do? Communicate to you. How to find, how to communicate. Find, communicate. It's the essence of what marketing is. So based on the communication, what do we now want to do? Next step is, what do we communicate, or why is my prospect my prospect? Why is my prospect a prospect at all? Ask the same question a different way. What's in it for them? What's in it for them? See, the essence of what I'm going to communicate will be what's in it for them. And unless I know what's in it for them, I have nothing to communicate at all. Unless I know what's in it for you, what I end up with is what I call egocentric marketing, which is marketing that doesn't tell you why it's beneficial for you to work with me. What it does is it tells you what I do for a living. I provide factoring services. I provide cash flow services. So what? What's in it for you is the only thing you need to be communicating to other people. The front of any of your marketing communication should basically be 3 reasons why you should do business with me. If you're talking to a consumer, 3 reasons why you should work with me. See, and that's what the essence of the marketing communication is. What is it that we ultimately communicate? Why would anybody want to do business with you? Because you're providing them one of 2 things. You're either providing them enhanced benefits or you're providing them reduced burdens. Enhanced benefits or reduced burdens. That's why anybody would want to do it. I mean, you wouldn't be here now if you did not believe that there was going to be an enhanced benefit after you graduated from this class. Or somehow your burden would be reduced. When it comes to a business, what's the primary enhanced benefit that a business will receive? 3 basically, right? Sales, profit, cash flow. Any type of business basically focuses on increased sales, increased profit, faster cash flow. Those are the three major benefits. What are the primary burdens that a business suffers? Primary burdens will always be what? Competition. Reduce sales, yeah. Competition, taxes, paperwork, government regulation, right? So the burdens that you would want to be able to relieve, if you're talking about that, would fall into competition, taxes, paperwork, government regulation, right? Or both, or any combination of those two. You know, we have a graduate from Nashville, calls on all the funeral directors in Nashville. There were 26 funeral directors in Nashville, apparently. He calls on them all. He actually sets up a phone call. He gets a chance to go in. He sees them all. He calls me up because he does 26 presentations, and he gets 0 conversions. 26 presentations, 0 conversions. And all of them were in person. And I said, okay, so tell me, what did you say when you went in? He said, I told them that I could help them with their cash flow. I said, okay. What did you say after that? And he says, that was it. I said, what do you mean that was it? I mean, when you said, I can help you with your cash flow, then what did you say? He said, well, I asked them if they had any questions. I said, okay. All right. Let me ask you a question, because I don't know about the funeral business at all. I'm saying to him on the phone, help me to understand the funeral business. I mean, I don't even have an order of magnitude. I mean, how do they measure success in the funeral? I mean, is it like, you know, number of units? I mean, what's the measurement of success in this thing, right? And he says, I don't know. I said, what do you mean you don't know? I mean, is it an occupancy issue? I mean, what exactly is it? Is it a vacancy issue? I mean, what are we talking about here? I said, you know, what's a successful funeral parlor do? I mean, is it 1 unit a day? Is it 1 a week? I mean, what is the standard of measurement here? He says, I don't know. I said, all right, let me ask you a different question. What's a profit margin on a typical transaction? When somebody dies and comes in, what's the profit margin? If they charge $5,000, what's their profit? And he says, I don't know. I said, okay. How long do they usually get paid? What's their payment method? Do they get cash up front from somebody? Do they charge the credit card? I mean, what do they do? How do they get paid? He says, I don't know. And I said, well, listen, how in the world are they going to do business with you if you don't have a clue about their business? I mean, if you can't tell them how you're going to help them, how in the world are they going to be able to believe there's some type of benefit that you're going to be able to receive from them? So what I suggested to him is he goes back and he just simply interviews some of these guys and comes back and understands what the benefits are. See, real simple. Unless you tell somebody what's in it for them, they've got no reason to do business with you. And that's what the marketing communication is. When I talk to a broker, I'm talking to a business broker about referring business notes to me, there's one thing that's important to them, what's in it for them. And there are 3 reasons why they would want to refer somebody to you. Number 1, they'll list more businesses. Number 2, they will sell them faster. And number 3, you'll pay a referral fee. That's it. Those are the 3 reasons. So if I'm putting together a communication to brokers, I'm going to put together communication that basically says 3 reasons why you would want to refer me business note business. Number 1, because you'll list more businesses, you'll sell them faster, number 2, and number 3, I'm going to pay you a referral fee. Now, if I'm talking to a business note owner, I'm not going to say those 3 things because it has nothing to do with a business note owner. If I create a brochure, look at it a different way, and I'm going to use that same brochure for a business note owner as I do for a real estate note owner, I will never be able to come up with a meaningful communication that matters. Because if I've got a real estate note owner, I've got Nat over here, who owned a piece of real estate. He sells the real estate, he takes back a note. If that note goes into default, the worst that can possibly happen is he defaults, or he forecloses. Forecloses on the property based on a default, takes the property back. Inconvenience? Yeah. Tragedy? No. He just takes it back. He owned the property at one point in time anyway. So bottom line of this thing is, now he'll own it again, he'll have to paint the house, do some landscaping, and sell it again. It's not a disaster, it's not a catastrophe. Now if I'm talking about a business note owner, what's your name? Gillis, that's right. Hillis. When I'm talking about Hillis, the business note owner, who sold his business that he worked for 25 years, took back a note which was his retirement. The possibility of a default is not the possibility of an inconvenience. This is a major tragedy in his life. What, 6 months later there's a default? He's going to do what? Take the business back? Where the payables are through the roof? The business has been destroyed. He gets back what? Goodwill that has no will attached to it? No, that's a disaster. That's a tragedy. So when I talk to Nat, the real estate note owner, and I say, yeah, but when you sell your note, just think about the fact that you won't have to worry about a default. He says, okay. I mean, I got it. It's not a meaningful communication, but I got it. And on the other hand, when I talk to Hillis, and I say, what I also want you to understand in this entire transaction is that what you will absolutely get is the security you thought you got when you sold that business to start with. Now it's a whole different story. Now that's a meaningful communication to him because that's a real fear he's got. See, what I've always got to be able to do when I communicate is understand what's in it for them. Whenever you see the American Cash Flow Journal and you see an ad that starts off with 3 reasons to, whatever I want you to do, 3 reasons to take this particular training program or whatever, just know I wrote it. And I do that for a reason. I call that a forced discipline because when I start off with 3 reasons to, what it does, starting off with, is it allows me an opportunity to say that I've got to identify what those reasons are. The second thing that it does is it forces me to put it in the top of the communication so that you read right from the very start what's in it for you, and that now becomes the communication that you're going to be receiving. See, anything from your standpoint that talks about what's in it for them is a meaningful communication. Anything that you talk about that has to do with you is a non-meaningful communication. It's what I call egocentric. Therefore, what are you trying to accomplish? What your standard is meaningfulness. And what your result is the very essence of the communication message itself. It's your marketing message that you develop. Now, where are we? What's happened is, number one, I've identified my prospect.